got a lot of movement already starting here this week. The VIX is up 4%, gives you a nice start to potential volatility. What are you watching here today, Ivan? We've got stocks slightly lower. You've got the dollar lower as well. Gold and silver slightly up. Bitcoin down, and the euro and the pound seeing a little bit of upside. What are you watching today?
If I could just share my screen the fastest I can ever do it. Yen pairs have had a little bit of a dip this morning, I would argue. There you go. But then that has been reversed. So I am wondering if dollar yen hitting 160 was a local target for the market. So yeah, that was I don't know what was the move. The move was 100 pips, give or take.
I saw that. Is that the next attempt at intervention? What's going on there with the yen?
Nah, this is not an intervention. This is just market moves. It's very interesting to think that way. That's nice little 100 pips is that's not Bank of Japan because we have risen quite fast. This is just normal market moves. But if we dropped like 400 pips, then then I could be inclined to Bank of Japan. I have seen recently that there's more and more talks that they are going to, or they need to, not going to, but they need to increase rates in the next meeting in July or something. Then this might be reversed, but so far so good.
I know, Ivan, that with the yen, there's been kind of a push in the direction of like slowing down bond purchasing programs, and I'm curious if you could just for a second explain why is that so hawkish, right? So a lot of people have been kind of making the point for the yen in the sense that they're slowing down their bond purchases. And that could be considered potentially hawkish, as you mentioned. Maybe also rumors about rate hikes. Is the yen going to see some strength off of that?
Okay, long answer, very short. You need to know the base of where we are right now. Bank of Japan is spending, I don't know, upwards with trillions. I think it was 6 trillion yen on buying bonds. That lowers their the value of yen, and they have done that like unlimited amount of money, they have said at least. And now when you go away from that and you spend a bit less, maybe 5 trillion and 4 trillion, that is seen as hawkish. And then if you increase interest rates on top of that, that is seen as hawkish. But they're still ultra dovish in whatever they're currently doing. And they're the most dovish central bank of the G7 countries.
Yeah, so it's almost like less dovish, more so than it is hawkish, which I think is maybe a better way of saying it. So it's like less dovish for them to talk about rate hikes and reducing purchasing.
Yeah, it's more like going 100 miles an hour and then going down to 90.
Yeah, that's a good way of putting it. I like that. So for you, Ivan, when it comes to the yen, are you more looking to buy dips on yen crosses, or are you waiting for a true sign of reversal? What are you thinking?
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
I know your questions, but I'm not going to get triggered because I'm triggered. Because you have to look at the current monetary policy. What does it say? It says currently you're going to spend a limited amount of money. So it has to be yen bearish until they change. Because they've said for like, I don't know, 2 years now that they're going to change. Has it happened?
Yeah.
So yeah. I can't work on what they say, because they have said it so many times that they're going to do it and then never did it. So I'm just going to listen to their actions instead.
You know what I took out of that too, Ivan, if you think about it, it's a good point, because the Bank of Japan, if you take a look at the Bank of Japan versus the US central bank and the European central bank, I would argue that the US and European central banks have been a lot more transparent and clear about what their plan is. And then they proceed to actually follow through with their plans for the most part. Now, that's not forever, and they don't have a 100% track record of that. But if you compare US monetary policy and European central bank and UK, relatively speaking, we kind of know as traders and investors what to expect. But then you look at Bank of Japan and it's just this wild card. And it makes me wonder, is that why people, is that another contributing factor to why when we look at, you've got the Australian dollar against the Japanese yen, or if you pull up the dollar against the yen or the euro against the yen, this yen is just in a free fall over time. Is it also because people are starting to just really be not trusting of what to expect from the Bank of Japan? Is that a contributing factor, do you think?
I don't know where the shift came, but we have a new central bank governor of Japan, and they were supposed to back then go from trying to cap their yield curve, so the yield on a 10-year from like 0.75 to 1. And then the day before, Nikkei published like all exclusive article about that they were thinking about doing it, and then the market reacted on it, and then the next day they didn't.
Yeah, and
they use the news, or they use journalists to publish their stories to see what the market does with that information, and if it doesn't give it a good enough reaction, then they don't do it.
Yeah, that's so interesting, and it's just such a question of how much can you take what their antics are? Are they real? Are they kind of trying to butter up the markets, trying to make some sort of manipulation to in their favor, which is not something unique to the Bank of Japan. A lot of central banks do that, right? They jockey for position, they jawbone, if you will, to try and get kind of some sort of objective complete for their bank. And I think that's, again, not unique to Japan. However, with the Central Bank of Japan, there's not like clear, hey, we're going to be doing this sort of intervention program, we're going to be doing this. It's a lot of times it's kind of like trying to talk down the market. And then, same thing for the Fed, but at least they have kind of like the dot plot, and they stick relatively to it, and they speak transparently about what they want to see in the data in order to see rate cuts, so on and so forth. So in terms of the yen, for me, it's like, this is just a tough trade to tell me that, if this thing dips, that buyers are not going to step in and do it again. We've done this so many times, and it doesn't mean that it can't break down. It will break down at some point. Something will change. The dollar may lose strength. The euro something might change. But we've done this pattern where we hit up against a level of resistance, and then we break through it, and then retests of those areas become key levels of support, and we just keep moving higher and higher against the yen. And despite other central banks joining the party, Ivan, for kind of dovishness, we still see, as you mentioned, the Bank of Japan being the most dovish of the group.
Yeah, and that's the fun part, and that's kind of also like, what does it mean? I think that's another question you have to ask yourself. What does it mean that a country cuts its interest rates? And then some do, or some did, last few weeks, and some didn't.
Yeah,
Australia didn't, New Zealand didn't, but Canada did, Europe did, UK didn't, America didn't. And then you get like this small, I would call it a small divergence in between the central banks. But what does that lead to in terms of Forex? And you can see euro yen now going higher on a weak economy, probably rebounding a bit now. But it's been an incredibly strong euro yen trend for 2024. Why is it so? It's Bank of Japan by itself devaluing their currency. Now, the problem for Bank of Japan is that, or the mismatch is that they have said they're going to start increasing interest rates, which they did once, because when they reach their 2% target. But 2% target has been above the target for the past, I don't know, is it 12, 14 months in a row? Like, how much more do you need?
Sure. Yeah, no, it's just an interesting one to watch, as just even though you see other central banks starting to come out as more dovish, and the Swiss
Mhm.
National Bank cutting rates surprisingly. I mean, you've got a theme of rate cuts, and yet the yen just can't seem to catch a break. Anyways, Ivan, I want to push on to some other topics as well. What do you think about the dollar right now? Again, you touched on it for a moment there, the euro and the pound. Dollar pulling
Mhm.
back. Is this a pullback before we kind of make a push up to that 106.4 level? Do you think that the dollar has upside? Or, in my opinion, we are just kind of stuck in a range. I just don't see, until we get more clarification, maybe next CPI or NFP, the dollar to me just seems stuck in a range. But I'm curious what your thoughts are.
Mhm. So where are we in the world? We are what, end of June,
Mhm.
give or take. When are you supposed to have volatility? Are you supposed to have a lot of volatility in end of June, past the last FOMC meeting of the first half of the year?
Yep.
No. So my answer is range. And if it does break higher, I would argue, okay, it's just gonna fail because that's what it generally does. What I see slight bullishness on the dollar. Even though we have priced in 2 rate cuts this year, it's not enough to bring in the bears aggressively over the summer months when volatility starts to reduce. So I think that what FOMC gave was bearishness, and then that was turned around, I guess, and that was kind of the move. So for me, it just is, what do you call it, unsustainable moves going higher or lower, for that matter, where it stops randomly and it goes down and it goes up again, and then you're wondering what is your setup and does it actually work. And generally my experience is that general setups doesn't work in the summer months, like now, and more of short-term, also what do you call scalping, or more like a day trade, kind of like taking less of your normal trades.
Mhm.
Because if you say that, okay, if I was going to trade the dollar now, there's no reversal before it went higher, it just went higher and it just went lower, and then it just stopped at a random price of 105.90. So name of the game.
Yeah. Yep. And I think, with the dollar bouncing higher, at the same time, the stock market started to pull back. Seems like this lower dollar is helping out the story for stocks. I was talking about this just before you joined, Ivan, about the idea for the indices. Really watching how Nvidia closes today, but I'm curious your thoughts on the indices as well. Again, Nvidia down another couple percent here, 2.62% today, and I'm just curious what Apple's doing as well. Apple's bouncing a little bit here. What do you think about the indices? Are they due for a pullback? Do you think that they have room to keep going? What do you think?
I think I saw a news article where it says that Nvidia lost, was it $20 billion in value in, like, I don't know, a day or so.
Yeah, I saw something crazy like that too.
Yeah, because it was 200 billion krona, which is like a lot of money. But it's just normal market fluctuation. So when it comes to S&P, the question is, where's your English? Where do you have your competitive advantage? Is it currently at 54.91 at an almost peak, at all-time high? Is that where you normally gain money? Is that your momentum trade? Sure. My kind of competitive advantage is much lower price. The surprisingly, so I'm on the wrong chart. The surprising strong June, I would argue. So if you bought every month at the beginning, that has been kind of the last 3 months been a winner chicken dinner, but it's been incredibly strong.
Yeah.
I'm surprised. I have to say that I'm surprised by that. But regardless, can't do anything about it.
Yeah, it has been incredibly strong. And again, I keep coming back to this topic about the thin leadership of a couple stocks really carrying the weight.
Mm,
But there is a case that I would say where I really like the stock market long, specifically like the S&P 500 or the Dow Jones, which I think,
mm,
the Nasdaq has had just so much strength because it's so
mm,
comprised of like tech stocks. But there's a lot of companies this year, a lot of parts of the stock market that have not done nearly as well that I think could actually be great buys, and perhaps eventually benefit from the AI hype. Right now, it's just a very interesting market this year. The stock market, most things are up, but most things are up mildly. And then the indices and specifically a couple key stocks are up massively, right? You've got Nvidia and you've got Apple's and Qualcomm. So I think it's interesting because if we actually get a pullback, I think I do want to have tech exposure for sure. But I also want to look at the areas of the market that have not yet seen so much benefit.
There is something I'd like to show you guys. You can feel free to print screen this if you would like. This is Credit Agricole's bank report from, this one was Friday. The information is still relevant, so feel free to take this away if you want to. You should be able to read this, but this is a rundown for all of the major currencies really and gold here. So you can see the NOK. I've been speaking about the NOK quite a lot actually, saying that it's very undervalued, and sort of going into 2025, we could definitely see a stronger NOK. So that's nice. So yeah, feel free to screenshot this if you would like. I'll leave it on the screen for a second. Pollen in England is evil. Yes, it's very, very difficult to live with. I took some Pirites, if anyone knows what that is. It's a sort of hay fever tablet, but they don't really seem to do much. So yeah. Moving forwards, Credit Agricole is still selling the yen, buying the yen, selling the dollar yen and euro yen, long on the euro pound as well. Interesting thing is they are all in a loss at the moment. You can see negative 61, plus 4.9%, or sorry, 0.4.9%, and then negative 7.6% as well on the euro yen. So they're not doing too hot, which is quite interesting. Let me pull up the euro yen chart for you to see. So if we mark up their position, it'll make more sense on a weekly chart here. So we can see prices are actually broken above the previous highs. This was a major level of resistance. I've been watching this for quite a while, but there's not really been any reaction here. And to be honest, there wouldn't be, because nothing's really changed on an economic point of view. So give me 1 second, I'll mark this up so you can see the actual position. So 160 entry, that was a target, so entry is 168. Yeah, so they entered here. Their stop loss is 2.7%, so it would be, actually they're almost at their stop loss now. So this is the Credit Agricole position on euro yen, and to be honest, from a more retail point of view, this looks awful, but there you go. You can't really come in from a retail perspective and say that an institutional position looks bad, because obviously they have more insights, they have access to more things than we do, generally speaking. Black seed oil tastes vile, but it's great for hay fever. Black seed oil, that's interesting. Okay, I'll take a look at black seed oil, thank you. Shorting the JPY is a bad idea. Well, actually, shorting the JPY is a good idea. Going long JPY is a bad idea. So going short euro yen and dollar yen is it's a bit of a difficult one. We did see some movement today. So again, this is something I've been saying that I'll get rid of that position for now. I wouldn't be going in for any long positions at the minute, because we have things like these wicks. Now, I'm not sure if this was an intervention, and if it was very, very minor. But there's no warning for moves like this. It's not like we can read a bank report, or we can look on FX Street or Edge Finder or anything and say, watch out for this level at this time because there's going to be an intervention. We don't have that. So for example, if you entered off this bullish engulfer, and let's say you had your stops at break even, you would have been taken out for no real reason. So yeah, for me, it's just a bit too choppy. We're in danger zone, really. You know, if we take a look at the dollar yen, it looks a bit dangerous to start taking trades here. Now, I'm not saying it's bearish by any means. I'm definitely not a bear on this. I am bullish, but it's just, you know, from a technical point of view, there is no entry for me. It was talk about intervention, like always. Yeah, intervention it's kind of like the main driver, or like the main concern, really. I mean, interventions aren't made. So the MOF, which is the Ministry of Finance, they don't intervene in the yen to reverse it. The point there, you know, the reason isn't because they're sat thinking, oh no, the yen's losing too much value, let's cause a reversal. It's more just to stabilize and slow down against the dollar. So, you know, even if they do intervene, it's not a case of we'll start seeing the yen move heavily to the upside. It's just that quick fluctuation and a slowdown. Anyway, moving on. New Zealand Swiss is one I took on stream last week. I think it was Thursday or Friday. In a bit of drawdown here at the moment, but it's not really doing much. I am not totally convinced about this position, and I'll show you why in just a second. But I can show you the edge finder for this. So edge finder is very bearish on the New Zealand Swiss. So we can see COT data is quite flat, retail sentiment, seasonality, trend reading, inflation, interest rates, PMI, manufacturing PMI, employment change, and unemployment rate all in our favor. So it does look quite good on the surface. However, we are currently long on the AUD CHF. So I can show you this position here. We've been long since, I think it was early last week, actually. So yeah, the 19th. And this one's moving quite smoothly. So the New Zealand Swiss trade was yes, because edge finder looked good, and yes, because technically this lines up well with my criteria. But this also acts as a nice hedge for our original AUD CHF position. So yeah, it's quite a nice play. So if this does hit stops, for me, it's completely fine, because that means our other position will be doing, you know, more than fine to cover that loss. Now, hedging is not something I do on a day-to-day basis. You know, I don't really go into the markets looking for hedging, but you know, if it presents itself, I'll happily take a small risk just to cover, you know, upside and downside of other positions. So technically, you know, we've got this golden zone right here. Price is inside or at the 50% level, which is what I like to see. So if we take the high, which was here, so we take the previous high to the low, this is a move of 144 pips. So the 50% retracement should be here. Yep, so around 70 pips, which we can see here at 69.7. So it's a 50% move backwards, or 50% correction of the previous move is kind of what I aim for in a technical setup. And then that's where I'll enter for continuation. So we can see very, very nice move to the downside, lower highs. We did create sort of a double top here, or slightly higher high, but still the trend is unbroken. So I'm now looking for this to be the new lower high and a continuation for the downside. Price is still underneath the 200 moving average. So yeah, technically it looks fine. It's just playing around at the moment. You know, we've not really seen much movement since we entered.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.